If we come to gold equivalence, meaning the market cap of Bitcoin equals the market cap of gold, which I think is perfectly logical, we'll probably exceed that 100,000 sometime in 2022. I actually believe, and I've said it a lot of times, that I actually believe that this transition will be the biggest wealth creation opportunity I'll probably see in my lifetime.
Hello and welcome back to Altcoin Bus Spotlight with me, Leah Heilpan, the show where we speak to entrepreneurs, innovators and thought leaders in the cryptocurrency and blockchain space. Joining us today is Mark Yusko. He's an American investor, hedge fund manager and philanthropist. He's also the founder, the CEO and CIO of Morgan Creek Capital Management. Let us know in the comment section who you want us to interview next, what topics you want us to cover, and if you enjoyed the show, then don't forget to hit the like button. Mark, great to have you today. How are you doing?
Doing great, Leah. Thanks for having me back.
Absolute pleasure. Now, lots to discuss, but I want to start with you because you are from the traditional investment world. So tell me about how you made that move to the crypto world. What happened?
Yeah, the interesting thing is, we launched Morgan Creek 15 years ago. And one of the things that we have always been involved in is investing in innovation. Really, that manifests itself in venture capital investments and tech investments in the public markets. But there's been a lot of times where we've been out there on the leading edge looking at new technologies, whether it was the internet back in the 90s or the mobile net back in 2010. And 7 years ago, a good buddy of mine, Dan Moorhead at Pantera, we had backed him when he started his hedge fund. He called and said, hey, come out to San Francisco and buy a dinner. I'm like, great. Always want to go out to San Francisco,
Nice.
See Dan. And he said, hey, I'm shutting down the hedge fund. Returning $1 billion to clients, which, pretty impressive thing to do. But I'm going to start two new funds, one in Bitcoin and one in blockchain technology. And look, I was, I wasn't, messing around on Silk Road. I wasn't a cryptography student. So I didn't really get Bitcoin in 2013. But as soon as he said infrastructure, picks and shovels, I'm like, oh, yeah, get it. So, we went into that fund and I made the first of my many, many mistakes in crypto, meaning I invested in the infrastructure fund. That's up 11x. No one's complaining. But invested in the Bitcoin fund because that's up about 150x. Yeah. Best performing hedge fund of all time. So from that point, I started thinking about it, did a little research. I actually wrote a paragraph, just one paragraph in a 40-page letter to clients not that long after, about 6 months after Dan and I met, saying, Bitcoin looked like an interesting investment opportunity, like a special situation to complement a traditional portfolio. It was at $500 at the time. And I literally had clients call up and say, hey, we'll fire you if you don't stop talking about this crazy internet. And really what pushed me over the edge is I started to get interested, made some investments, both in the infrastructure side and the crypto side itself. And in 2016, I ran into this guy. Many people know him. I think you've talked to him before, Anthony Pompliano. People know him as Pomp. And it was interesting. We only met briefly. He and his partner, Jason Williams, were looking to invest some money out of their firm Full Tilt. We were investing a lot in ride sharing. We were early investors in Uber and Lyft. But the interesting thing is I heard him on Patrick O'Shaughnessy's podcast about 2 weeks later. I'm like, that sounds like something I would say. That sounds like something I did say. Wait, that's it. And I always joke when I got to finally meet him, we got together, we had breakfast, 1 hour turns into 3 hours and turns into the next day. And we're getting together a lot. And I always said it's like talking to myself. I say younger looking version of myself, but myself. And we immediately figured out we had to do something. So we were thinking, all right, we'll do another blockchain infrastructure fund, the Morgan Creek Blockchain Opportunity Fund. And we'll do it the old way of about 70% co-investment. 70% external funds like Pantera and 30% co-invest where we would invest alongside. And Pomp says, no, let's flip that. So let's go more direct investing. Let's become one of the leading investors in the space. And we'll do a little bit of co-investing in other funds to keep up relationships and deal flow. And so that's what we did. So we launched Fund One about 2.5 years ago, went out and raised money, did that. And then
what a journey.
Yeah. And then raised, we're in the middle of raising Fund Two. And really what it comes down to is I realized that this was technology and innovation in technology and innovation in computing power. And I actually believe, and I've said it a lot of times, that I actually believe that this transition will be the biggest wealth creation opportunity I'll probably see in my lifetime. And I'm about to turn 57. I'm going to be around a long time. But I really think this one is huge because if you think about Web 1.0, it was a big deal, right? Intel, Microsoft, Cisco created a lot of wealth. But Internet 2.0 was bigger, right? That was companies like Alibaba and Facebook, and they were growing bigger and faster and better because they were building on the better infrastructure of Web 1.0. And I think Web 3.0 is going to be even bigger because we're building on top of the internet and the mobile net rather than building on top of client server technology and mainframes back in the good old days. So huge opportunity.
I'm going to jump in because I want to talk about Bitcoin because I think that is something which we're all talking about right now. It's the first crypto. It is currently climbing right now. So I want your thoughts. Firstly, we spoke a while ago and you are quite bullish on Bitcoin. You've compared it to gold. You've talked about it as a safe haven asset. But during this current economic crisis with everything that's going on with the virus, would you say it's acted as such a thing? Do you think it's acted as that safe haven asset at all? And are you still quite bullish on Bitcoin?
No, absolutely. It acted exactly as all other safe haven assets did. The thing about crises is this was not that what happened in the markets in March was not really about the virus itself. The virus was the pinprick, but the bubble that had been caused by leverage in the system, massive amounts of leverage in hedge funds, in corporations, in mutual funds, in investor portfolios on margin. And so what happens in those situations is portfolios start getting liquidated, meaning you get a margin call, right? You put 50 cents on the dollar down, you borrowed 50 cents, and the stock prices start to go down, and the bank calls up and says, hey, you have to deposit more margin. People are like, well, I don't have any. And then then you have to sell. And in a liquidation, you don't get to sell what you want to sell. You sell what you have to sell, what's liquid. So you have a lot of small cap stocks, they're not liquid, there are no bids, you can't sell those. You got a lot of high yield bonds, can't sell those. So you have to sell the gold miners, the high tech stocks, the big cap stocks, and Bitcoin. So you had a lot of hedge funds, a lot of institutional investors that had crossed the chasm. They bought a little bit because it was starting to look like it was going to move higher in the parabolic move that we all expect. And people were starting to dabble. But what happens is now suddenly those same hedge funds are getting margin calls. They're forced to sell, and it's last in, first out. The last thing in, Bitcoin, was the first thing out. So you had Black Thursday down 40%. But look, we're already above Black Thursday levels in Bitcoin. So people take these short-term moves and try to extrapolate them into long-term trends, and they're just not, right? They're really unrelated events to the long-term fundamental part of Bitcoin that is so attractive, which is more uses, more adoption, more widespread ownership, more wallets, more people with zero 0.1 or more Bitcoin in their wallet. So all those things fundamentally are really, really strong. And what people seem to miss is that uncorrelated doesn't mean that you're uncorrelated every day, every hour, every minute. It means you're uncorrelated over the long term. And the correlation of Bitcoin to other assets is very low, still about 0.15. The correlation to safe haven assets like gold or cash is actually reasonably high.
Okay, so you're still pushing on that. It's that safe haven asset, and you're still comparing it to gold. I think it is really interesting, to be honest. And like we said, we've seen it pump the last few days. We've got the halving coming up. So why do you think then it's starting to go up? Like you said, like we discussed, it was down back in March, but it's climbing and it's reaching. It's getting there. It's getting back up to what we saw this time. Yep. Well, not quite this time last year, but this time last summer. So what is causing the pump right now?
It's just supply and demand, right? There are more people who want to buy it than there are that are willing to sell it. That one of the things about Bitcoin in particular is it has two types of owners, right? There's the hodlers, the people who will never sell, right? Their cost basis is so low, they're in it for the long term. They view it as a core holding of their portfolio, and they're just not going to sell it. Then there's the newer entrants to the market that are really, many of them are speculators, right? They're attracted by price, and there are people who just trade it, right? They're in and out. They just like the movement. And those on the margin aren't going to change the long-term price curve other than over short periods of time, like we saw over Black Thursday, where everyone's being forced to be liquidated. But what you've got is this increasing knowledge base that's being disseminated, groups like yours going on the air, people writing about it, people bringing it front and center. And so as people learn about it, and just this week, right, I got 5 emails from people saying, hey, what's the best, easiest way to buy it? And that's very similar, right, to how it was in any of the previous big moves. And the thing about long-term asset price movements is they tend to be punctuated by these really rapid kind of fear of missing out type events. And so if you go back in time, Bitcoin's had many of these, right? It pumps really hard, and then something happens and it crashes. And then it, goes dormant for a while and nobody wants to talk about it. And then suddenly it starts to rise, and then people, I'm going to miss it. I'm going to miss it. So they jump back in, and it pumps really well above fair value. And that's true of all markets, right? Markets revolve around fair value, but they don't spend much time at fair value. It's like the pendulum of a clock. It's never in the middle. It's always on one side or the other. But the middle is where fair value is. So fair value of any market is a rising line up and to the right at some level of growth, right? Real growth or adoption. Stock market is determined, the fair value is determined by economic growth and economic profits, corporate profits, and interest rates. Bitcoin growth is determined differently. It's a network, and networks grow based on usage, based on regulation, based on, in this case, millennial adoption, because there's really a difference between how older investors view the world, right? They think of gold as their safe haven. Younger investors think of Bitcoin as their safe haven. So all of those things go to say that, fair value in the markets today in Bitcoin is somewhere in the mid-teens thousands. But it's highly likely that in this next move, we'll get well above fair value. We'll get to a level that's too high, and then we'll have another crash. And then we'll continue to move along to, look, fair value of this network, if you follow with the stock to flow model or the original parabolic growth model, comes out to about $10,000 in 2017. Magically, we hit that about 6 days after we were supposed to. Then we went all the way to 20, which was too high. Then we had to come down below 3,000. That was too low. And by 2021, about the mid to end of 2021, the fair value will be around 100,000. So we'll probably exceed that 100,000 sometime in 2022, but then we'll fall back probably below that long-term trend line again. So I think the next year and a half are going to be pretty exciting.
Okay, so you mentioned a couple of numbers there, some potential new all-time highs. So let's just go back a little bit to the halving, because that's coming up in a couple of days. So firstly, how do you think that's going to affect the price? And when will we then see new all-time highs? You mentioned 2021. Do you think we could potentially get there even sooner at the end of 2020?
I really don't think we get there sooner. I mean, people don't really understand what the halving is. I mean, what the halving is, it's not some event that automatically changes the price of Bitcoin. What it does is it halves, as the name implies, the number of block rewards that are given out every day. And so what that has is a pretty big impact on miners, right? If you are a miner and you rely on that income to support your business, and you have to pay for the machines and you pay for the electricity, and suddenly there's half as many rewards, that means there's half as much revenue to support the miners at the fixed price. So what has to happen is the price has to adjust, or miners have to go out of business. And a little bit of both is going to happen. And on top of that, you've got a technology upgrade cycle, and then you've got the difficulty adjustment within the algorithm itself. So all of these things come together. And the way what we see in the previous halvings is there is some movement in anticipation, because people think for some reason that magically we're going to go to equilibrium the day after the halving, and prices will double right after the halving because we have the number of rewards. That's kind of silly. That's just not going to happen. And so then there's disappointment, right? It's buy the rumor, sell the news. So there might even actually be a drop post-halving as everybody's hungover from the halving parties. Yeah. And then you have this slow, steady climb to an all-time high, sometime 12 to 18 months. The models all point to 18 months. And that's where we end up.
And you mentioned 100K 2021, but previously when we spoke, you've compared it to gold and you've explained that it could reach highs of 400K. So number one, do you still stand by this? And number two, explain how you landed on 400K for us.
Oh yeah, it's easy. Look, if you think about gold, right? Gold is a safe haven asset. It's viewed as a store of value, and all the gold in the world, right? If you put it together, it fills up 2 Olympic-sized swimming pools. It's valued today at about $8.4 trillion with a T. And, Bitcoin today is a couple $100 billion in market cap. So if we think about Bitcoin's properties as digital gold, right? It's a great store of value. It's easily more divisible than gold. It's more portable than gold. All the Bitcoin in the world fits on my mobile phone. Now, I don't have all the Bitcoin in the world, and I don't keep any on my mobile phone, actually, because I've been SIM swapped twice. But
oh, wow, okay.
So don't SIM swap me again, because there's no Bitcoin on my phone, guys.
Wow.
So the crazy thing is that if we move toward gold equivalents, okay, and that's where I come up with the $400,000 to $500,000 number. If we come to gold equivalents, meaning the market cap of Bitcoin equals the market cap of gold, which I think is perfectly logical, you could easily see that $400,000 to $500,000 price sometime. And the reason there's a range is it really depends on the number of Bitcoin we have at the time, right? Because we do lose some Bitcoin. There will only be 21 million ever mined, but some do get lost, forever. And so we'll have some number lower, which means you could have a little higher price for a lower number. But if we had 20 plus million, somewhere around a $400,000 price gets you to that 8.4 trillion. So, somewhere between 400,000 and 500,000, definitely likely, probably out 7-8 years from now. I think I said a couple years, it was 10 years. But there's this parabolic growth curve, and it's likely to keep following that because that's how networks grow, according to not Moore's law, and I'm blanking on Metcalfe's law. So that's the math behind it.
And I think it's really interesting because these numbers are huge, right? People, there's so much FOMO going on. And I think even more FOMO as the years go by, especially if we hit numbers like you're saying. But you have previously said that being an early investor is important, spotting that diamond in the rough, no matter how crazy people may think you are. So how do you then spot that diamond in the rough? There's a lot of scams out there. People heard of Bitcoin back in the day, but also thought it was a load of rubbish or whatever it is. How do you spot that diamond in the rough then?
Well, at the end of the day, there are a lot of things that look to be interesting as a startup project. Lots of venture capital projects get started and they look interesting at the beginning and then they fail. But some don't. And spotting that one that will be successful actually is really, really hard. And there are plenty of people that get there by luck, right? And that's okay. Luck is good. I like it. It seems I agree with Thomas Jefferson. The harder I work, the more of it I seem to have. And what's interesting about Bitcoin is it in the early days, it was a science experiment, right? Really, people didn't understand what the brilliance of triple entry accounting was, and that blockchain technology really was a world-changing technology. And all Bitcoin was a single application of that triple entry accounting to, in the beginning, Satoshi-san, whoever he, she, they are, basically was trying to solve this digital cash problem, this double spending problem, that if I had $1 and I want to give it to you, we both had to have a bank account, and the bank takes a fee, and they're really happy, and we're kind of happy because we can keep our dollars safe and I can transfer it to you. But the problem is, if we had a digital asset like a music file, I could send you a copy of that file. So I had the original, you had a copy, they both play fine, you're happy, I'm happy. You don't really care if you have the copy or the original. The music industry is really pissed because they lost the sale because you're not going to buy an original. So they shut down Napster and they went to, certifying digital files, so everybody has to buy their own. And now they're really happy again. People are making money in the music industry. But in money, right, if I have $1 and I digitize it and I want to send it to you, well, why would I send you the original? I'll just make a copy, send you the copy. Well, that's a really bad thing because then I'm a counterfeiter and we're doing money laundering and all kinds of bad things, and we can't have that. So Satoshi-san comes along and says, hey, I can solve that. I can take this blockchain technology and I can solve the double spend problem, and I can make a better form of digital cash. And we're going to have all these transactions. But the problem was, in computer networks, you have to choose fast or secure.
Yeah.
And he chose secure. He wanted to have the most secure network on the planet. And today, Bitcoin is the most secure computing platform on the planet. It has never been hacked, not once. Hundreds of millions of transactions over 11 years. Hundreds of millions of transactions. Not one fraudulent transaction. I've had to have multiple Visa numbers in the last 2 years because they get hacked all the time. But they're really fast. They process payments really fast. So then Bitcoin morphed into this store of value, this digital gold. And when people thought, oh, wait a second, gold has a role in a portfolio, gold has a role in the world, gold has a role in life. And look, gold has many roles, right? There's gold in people's fillings, there's gold in computers, there's industrial uses. Only about 2.4 trillion of the 8.4 trillion is actually used as money. Gold is the largest currency in the world. It's bigger than the US dollar. It's bigger than the renminbi. It is the biggest global currency, but it's really hard to transact in. Bitcoin's better than that. So I could easily see us getting to that 2.4 trillion pretty quickly. So there's lots of things that make Bitcoin attractive, and how you spot it, a little bit of luck. You have a friend who's in the business, he introduced you to it. Little bit of, went down the rabbit hole. And the interesting thing, I've never met anybody, and I know a lot of really smart people. I say I have the best job in the world. I get paid to talk to the smartest people in the world about investing. And what's amazing is I have some really, really smart people. Every single one of them have started skeptical. But anyone who's actually done the work and actually dug into it have become true believers. And that's really interesting. People who don't do the work, they stay skeptical. They think it's a scam or a Ponzi. If you say it's a Ponzi, you just don't understand what a Ponzi is. If you say it's a scam, you don't understand what a scam is. It is possible the technology fails, right? It doesn't do what it's delivered to do, but it's been working for 11 years and done exactly as prescribed. You could say, oh, well, there's risk of some better technology. No, that doesn't work in the open source world, because if you create a better network, I can copy paste whatever about that network I like and put it onto Bitcoin and make Bitcoin the same. So technical obsolescence is out of the way. So we've got this wonderful innovation cycle. And remember, innovation cycles, I've talked, I think, with you or others about this before. It's a 14-year cycle. It goes all the way back to 1954 with the mainframe, 68 with the microchip, 82 with the personal computer, 96 with the internet, 2010 with the mobile net, and 2024, which is still 4 years from now, the trust net. Okay, the trust net is when everything in the world is connected, and it's all connected through blockchains, and we transact using blockchain technology. And Bitcoin is one of, and I think the core payment rail, the core protocol, the same way that TCP/IP powers the internet, the same way that DOS powered personal computers, the same way that iOS and Android power mobile phones. Blockchain will power, and Bitcoin will power this new connected world, the trust net that we'll live in going forward.
So Mark, with all of that in mind, with everything you've just said, I have to ask you then, when would you say is a good time to get into Bitcoin? Because you've spoken about this roller coaster every day. Because you've spoken about a roller coaster. Should people wait?
You should buy a little bit every day. You should never buy any asset all at once, right? Because then you have risk of a vintage year. But you should buy a little bit every day. Dollar cost.
What's a little bit? What's a little bit?
Look, everyone should have 1 to 3, maybe 5% of their portfolio in Bitcoin. Everyone, right? And it should be like gold as that, store of value, that opt-out insurance, that protection against a fiat total meltdown.
Yeah.
But if you're younger, right, then you should even have more. And why do I say that? Because
why?
Look, young, you have this giant fixed income portfolio of the future, meaning all your future wages, all your future Social Security payments, all that stuff that's 10, 20, 30, 40, 50, 60, 70 years out, that's basically a big fixed income portfolio. Now, when you're my age at 57, you have to actually start thinking about different asset allocation. And maybe I shouldn't have quite as much in alternative investments or things like Bitcoin. But, I probably have more than 1, 2, 3% because I believe that the asset itself is the most asymmetric asset that I've seen in my career. Meaning because people don't really understand it, they don't spend the time to understand the technology, they just think it's a scam, the upside potential relative to its current price is really, really high compared to other things that we look at, whether it's venture capital or energy and natural resources. I mean, stocks are wildly overvalued. People should be selling them. Bonds are pretty overvalued. Interest rates are really low. But Bitcoin is quite undervalued relative to what's going to happen in the coming decades.
Mark, it is always such a pleasure hearing your expert opinion on all of this, on crypto, on Bitcoin, on blockchain. So I want to thank you so much for coming on the show with us today.
No, always fun to be together and look forward to doing it again soon.